Hi everyone, welcome to this week's Tuesday market review. Hope everyone had a lovely Christmas. 2 days to go till the yearly close and lows to discuss. We're going to be taking a look at Bitcoin versus metals, along with the dollar, stablecoin dominance, and taking a look at Bitcoin and what is in store for the week and going into Q1 of next year. Plenty to talk about. Let's get into the video. Before I start, this video is for informational purposes only and reflects my personal views. It is not financial advice, and always consult a qualified financial advisor before making investment decisions. If you do like what you see in this video, then make sure you check out the link at the top of the description to join the Discord, posting daily trades, daily streams, thoughts and ideas, and much more every day in the Wealth Group Discord. Check out the link at the top of the description. So we're going to start off talking about metals today. Obviously, gold and silver have been the main attraction for a lot of participants at the moment, especially these larger participants. It seems to be that they are flocking to these more safe haven assets, right, rather than the likes of Bitcoin and Ethereum, which we can see. I'll discuss this chart a little bit deeper, but to be clear, right, it's fairly obvious. We can see from about midsummer, August, September, gold and silver started to rally, and then even from that sort of October, that post 1010 period, we can see how silver really picked up, and the weakness that came in from BTC and ETH. So gold and silver, they're long-term assets. Participants can be happy holding something like gold or silver much more than they would potentially be BTC or ETH, right? More of like a risk asset, and right now with inflation fears, with everything the Fed are doing and going into 2026, we need to see some positive outcome from the macro side of things. And right now, despite the rate cuts we've seen over the past few months through summer, crypto's had it hard. A lot of things are pointed in the opposite direction to what crypto thrives in and conditions crypto thrives in, and we can see time and time again following sort of rate cuts, we would price that rate cut in and just completely sell it off, and time again. And obviously we had that government shutdown. So when we look at like the past few months, since summer, like crypto hasn't had it easy. A lot of things have led against crypto and against risk assets, and there will be a point where people look towards risk assets again, and that is obviously the point where we want to try and hop back into Bitcoin, into Ethereum, and maybe some spot on some altcoins. So we had rate cut after rate cut after rate cut, which essentially didn't have any further effects on price, or didn't lead to any further upside on price, and we can see we continue to sell off. Obviously we had the 1010 October event, which completely fucked a lot of participants. A lot of price action has been completely sideways and messed up since that 1010 liquidation event in crypto, and this is something that the market, I think, is still dealing with. A lot of people were wiped out. We still don't have that sort of official post-mortem of what really happened and why the liquidations exceeded what some say above 60 to 70 billion of liquidations, which is obscene. So we can see even from like through summer, we were struggling from gold, and then we had that 1010 liquidation wick, and 1010 really ruined the market. And following that, silver has just been rallying. We can see a lot of weakness from BTC and ETH. So we're going to talk a little bit about metals compared to BTC and ETH, specifically BTC, the main major for me. And we're going to look at like gold, silver against Bitcoin, and also Bitcoin against gold. So let's get into this first chart. So I've discussed this a lot in the past videos, and I do believe that we are very close to a not necessarily a rotation into Bitcoin from gold, but at least some sort of outperformance. I think BTC is well overdue a relief, and at least well overdue some outperformance against gold. And there's a couple of reasons I think that. If we look at the Z score down here, there's only been 3 occasions prior to this time where the Z score peaked down into the -2.5, even as low as -3 region on the Z score. There was an occasion back here, so let's say 4 times, but I want to sort of discuss this sort of bear market period that I've marked out, and we can see that the Bitcoin against gold bear market lasted for approximately 406 days, or exactly 406 days, from 2013 to 2015. You can see the 2017 to 2018 bear market for Bitcoin against gold lasted 364 days, Again here, the 21 to 22, 378 days. And since our current cycle top on the Bitcoin versus gold pair back in December, you know, we're over a year now, 385 days to be official. And you can see there's kind of like a similarity between all of these, lasting from around a year to, you know, a year to 400 days. So currently we are on that 385th day. What I really like to see down here as well is the fact that the Z score is diverging despite price making lower lows on the weekly time frame, and on the 3-day we are seeing the Z scores start to form a bit of a divergence down here, and which when we get into the lower time frame shortly, you'll see how these sort of divergences often lead to a local bottom. So the Z score shows us how oversold or overextended price is against its fair value, and right now, you know, we can see that the BTC against gold chart is heavily undervalued and moving down into this minus 2.5, or at least was, and since then sort of bouncing. And like I said, we've got a bit of a divergence, a bit of difference between price and Z score, which often leads to a local bottom forming. So, you know, if we are going to start to consider that there could be a local bottom coming in between the Bitcoin and gold pair, it is going to happen anywhere from around here into sort of January 26 if we're looking at 400 days, right? If we look at this and pull it across to the 400 days and 410 days, it's going to be around the 26th of January. So keep an eye on this sort of next month really, and potential rotation coming in from Bitcoin and some relief coming in from Bitcoin. Not only that, like I said, if we go onto the weekly, if we go onto the 3-day, we can see there is a divergence forming down here on the BTC gold pair here. Similar divergence that formed into our February and April bottom, and then again here into our August and September bottom. So overall a really nice formation forming, and for a bounce back higher it is likely from around here. Also taking a look at the 365-day rolling VWAP with the 2.5 to 3 standard deviation bands. This officially has not been mitigated in history. The closest we got to it was back in March 2020, where we had the COVID wick. So super overextended here. In fact, with that overextended, we should be trading at bear market lows if we're comparing it to previous cycles. So overall, I'm looking for a local bottom very soon in terms of the Bitcoin and gold pair. It's just about timing this rotation correctly. And I do think if silver hadn't got on to do this rally it has done since October, you know, at the start of November, then I do believe we would have seen this start to bottom much earlier. So while we are on the topic of silver, let's talk about silver. Getting some strong sell signals here on the yearly VWAP, right up here. Overall, some strong sell signals coming in, and I do believe that this can be quite close to a local top, at least around here, 80, for a bit of a consolidation and pullback. And like I said, if we do start to see a cool off between silver and gold, I do think that crypto will react positively. Talk about the dollar further shortly as well. Obviously this is going to have an impact on price, but yeah, silver moving into super overextended territories. The weekly Z score is the highest it has been for over a year now. The highest last time it was this high was back in April last year, and before that July 2020, which both marked local tops for price. When we look at the silver against Bitcoin chart, and we can see some strong sell signals coming in for silver finally up here, and we can see a divergence forming on the weekly on the silver Bitcoin chart, with silver being super overextended. So again, this is another reason why I think we are very close to a rotation, at least some outperformance from Bitcoin against metals, and it's heavily underperformed, and you know, the market has been in a heavily risk off environment in terms of risk assets and more into these safe haven assets, into these metals. So if we start to see some positive macro side of things into January, or even just a bounce from BTC, I think we're going to see some really nice outperformance, and probably a big sort of move back down from this silver Bitcoin chart. I tend not to fade the sell signals. For me, they historically have quite a good hit rate, especially the strong sell signals, and we can see marking tops. But yeah, pretty crazy how overextended, or at least how far prices trade away from the fair value right now across the board on the Bitcoin against gold and silver. But that's obvious based on the fact that year to date, BTC and ETH are down now 7 and 11% respectively, and silver is up 163% and 67%. If we do it from that October November low, we can see silver up 50%, BTC down 23, ETH down 28%, and gold up 8%. So that is one of the main reasons why obviously we are seeing that huge discrepancy between prices and why these metals against Bitcoin pairs are rallying very strongly. Okay, now moving on to stablecoin dominance. With that in mind, with the potential idea that we could see some relief in Q1, right? Obviously Q4 was very, very underwhelming for crypto, in the fact that Q4 historically is very positive. There's no doubt about that. Historically, Q4 is a positive time for crypto. And as we just discussed, there was a lot against crypto during Q4, pretty much since summer, since August. Everything in terms of macro and other assets that crypto historically reacts poorly to rallying, has taken place, right? And we have reacted poorly and we have traded poorly based on that. So the fact that Q4 has been bad does not necessarily mean it's like over, and I want to get into that shortly. This could likely be just yet another big pullback that we've seen, another monthly downtrend that we've seen from Bitcoin, and throughout this cycle we have had several of these. So with that in mind, if we go into Q1 and realize that potentially that this Q4 period has been pushed back to Q1, this Q4 was not as it was meant to be, right, in terms of a rally, then Q1 could be that positive period that we're looking for. So if we look at stablecoin dominance and we pair together, we put into a basket the USDT dominance, the USDC dominance, and also the DAI dominance, it gives us what looks like a very, very key range, and that range starts from January 2024. So what I've got here is the red lines mark when price trades, when the stablecoin dominance moves into this 8.6%. And the green lines mark when the stablecoin dominance moves into this sub 6% to 5.5% region. And you can see that when we get a move into the 8.6% on the stablecoin dominance, right, we can see how the total reacts, right? This is the total market cap, right? So the total market cap of crypto. We can see that back here, the total market cap reacted positively. We then, again here, total market cap started to bottom into when stablecoin dominance moved into this 8.6% here, right? We can see bottomed, and then we went on to rally yet again here in April 2025. Stablecoin dominance moved and into this 8.6% region, and with the total chart also bottoming. And then from there, the total chart went from 2.5 trillion all the way up to 4.2 trillion. So adding almost 2 trillion market cap to the total. And then again here, we can see yet again, we are getting that move into the 8.6 region. This time we are trading above it, right? So a really, really critical place for the stable coin dominance basket. And why I've sort of marked this red box is because it reminds me of a similarity of the move we had back in December. And obviously this case, when price moves into the sub 6% region, we see the total market cap top, right? We start to see money flow out of stable coins, and we can see that time and time again as the stablecoin dominance increases. This means that money is flowing out of stablecoin, stable coins and moving into fiat, right? So it's pretty interesting to see here that if we did lock in a deviation above a sort of 8.6%, this would likely lead to yet another bottom in the total market cap. And moving into Q1, we could see the total market cap move back towards this 4 trillion area. And the opposing case is obviously that if we continue to hold above 8.6, that the stablecoin dominance will continue to increase, and we'll likely see a move much lower from the total. But for now, I do think that this is a very critical area for the stablecoin dominance and for the total market cap. And if we do remain to hold above here, then obviously it's bearish. But I am personally looking for a Q1 break back below this 8.6% region on stablecoin dominance. If that does happen, expect a big expansion from crypto in Q1. And that sort of aligns with my theory, right? That we are very close to a bottom and a reversal from these Bitcoin against gold chart, against the Bitcoin against silver. Like all of these charts are looking primed for a big reversal. So it's just a matter now of Bitcoin really locking in some strength and breaking 90k, and we'll get into my BTC shorts right now. So another thing I want to comment on before we get into sort of like technical analysis side of things and quickly give my thoughts on the week ahead is this chart. If you've watched my videos here or you follow me in the Discord, you know that this chart is something I live by and I have discussed time and time again, and you know, I would take this to my deathbed. This chart, and historically has been such a great chart for me to have an outlook on the market and really given me a bit of a support area to fall onto when I'm potentially in doubt of the future of crypto. So what we can see is that this is the trend-based fib tool, right? And this essentially marks, for me, the period between when the cycle might top and when the cycle might go on to start its bullish period, right? The official like parabolic period, if you want to call it that. What you'll find is that historically, when we draw the fib trend tool, and we draw it from the prior cycle bottom. So if I actually show you, I can show you this here. So what we do, we draw it from the cycle bottom to the prior all-time high to the cycle low, and then what happens is it marks that next area for us. So right now in our current cycle, this trend line marks from the 2018 bear market low to the 2021 bull market high to the 2022 bull market low, bear market low. Apologies. What this then marks is an area where the cycle always tops. We can see in this period, Bitcoin always cycle tops within this period, right? So, and the cycle is going to top from anywhere from October the 1st all the way through to November 2026. And then if we look back to when Bitcoin enters this period, this bearish period, and crosses over the 1 on the Fibonacci, we can see that in 2013 we had a 50% pullback. In 2017 we had a 40% pullback. In 2021 we had a 55% pullback, and our current pullback from the all-time high to our low was 36% pullback. So historically, every time we have crossed this region, we have seen a pullback from BTC, which kind of also leads me to think that we are pushing a fresh all-time high going into Q1. I think it's more than possible based on after this pullback, every time historically we made a fresh all-time high from that pullback. So that's something to consider. And again, it's just another thing that's adding to my theory right now that we could be forming a local bottom down here and pushing to new all-time highs in Q1. And a big rotation out of metals into Bitcoin and back into risk assets. Something else I briefly want to comment on is the fact that the Bitcoin yearly candle is going to close bearish if price closes below 93.5k. Historically, Bitcoin has never made a bearish candle after two bullish candles, right? In a bull market, we always see, this doesn't actually show you the 2011 candle, but it was bullish. It would be bullish, 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 bearish, bullish, 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 bearish, bull, 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 bear, bull, bull. And we can see that this candle is, you know, if we don't close above 93k within the next, 2 days, right? And, the yearly closes tomorrow, we are going to form a bearish candle. So with that in mind, I start to consider, right? I've discussed this in my prior videos, in my market reports, in my write-ups. Like, I do believe that cycles are getting longer. I do believe that Bitcoin is turning into a much more prolonged asset and with much smaller and aggressive moves, right? We can see that in this cycle. Our periods of consolidation have lasted, 150 plus days, in some cases even longer, right? And shorter. When we look at prior cycles, our bull market pullbacks lasted maybe at tops 30 days before we went on to rally higher. And this cycle is really different. We're seeing this much more slower grind and build up, right? And obviously, as we become a much larger asset with more liquidity and lower volatility, right? That's obvious if we look at the implied volatility of Bitcoin, the rolling 30-day implied volatility is decreasing, right? The volatility is at the lowest it has ever been and continues to make new lows. So you have to consider, obviously, as larger participants start to get involved, that the asset becomes much more slower and grindier, right? And do we move into these periods where Bitcoin is forming, right, these much bigger lull periods? If we look back at the yearly chart, do we form these lull periods rather than like really aggressive years one after the other before a really aggressive bear market, right? Like, do we move into a period where Bitcoin now is trading in a much more controlled and slower environment, and these lull periods, these pullbacks and these bear periods, if you want to call it that, last last longer than they have in the past, and that sort of backs up my theory that, you know, bull markets are getting longer, and for us to have a bullish Q1, we probably did need to see this call off from BTC. At some point I will do a new write-up on my Medium to discuss this a little bit more, but I want to wrap up the video now and quickly talk about my analysis on BTC. Overall, I do believe that in terms of like an intra-week and intra-month side of things, I do think that 84k still remains my level of interest to long. What we have right now is this sort of raccoon PA, as I like to call it. And what it is every time we sort of break into this support area, we form a lower high time and time again, which eventually leads to a sweep. And then from there, we consider, okay, was this a trap before a move up, or does this lead to a breakdown much lower? So right now, I'm kind of looking for that breakdown. I'm looking for a bit of a lower high here. If we do break 90k on BTC, then expect move into sort of 100 to 102k in my opinion. Obviously we are compressing quite a lot here. We can see quite a lot of compression. Personally, I'm looking for something like this into 84k and then a leg up into Q1. That would be my optimal scenario for BTC for a long. You know, the 3-day has broken out. Historically, 3-day breakouts have led to a move higher, but it's been very slow, and obviously that has happened over the Christmas period. So if we break 90k on BTC, I'm personally going to look to chase a long higher, but until then, I'm looking for a sweep into 84k to get long. If we look at EXO, I'm actually looking at getting short today into this region, into 88k. If we end up locking in this trap above here, which is currently looking quite nice for a matter of fact, then I'm looking for a move back down towards the lows, and like I said, locking in that higher low, that lower high, apologies. Right now, we have poor low on the 2-week composite below. We have 2 stacked poor lows, like I said, on that 2-week composite down below from Thursday and Friday last week. I do believe that if we do sweep down there into 84k, this is a max long region to get long on BTC. I really like the look of a sweep down here to be a buyer on Bitcoin. Other than that, not too much more to comment on. That's pretty much going to wrap it up for this week's Tuesday market review. Not really any else I'm looking at right now, just day trading things if my system prints up buy and sell signals, but I more wanted to comment on the comparison between metals and everything that's going on in terms of the higher time frame. So I hope you guys enjoyed the video. Obviously, if you did, please leave a like, subscribe, and check out my socials at the top of the description. Is the link to join Discord. Catch you guys on Thursday for my chatting from like episode. See you then. Bye.